I'm here today with Marco Gattino, the Managing Director of Goldfields. Marco, can you please tell us a little bit about yourself and what Goldfields does?
Sure. Thanks for having me, Mark. Always good to catch up. Goldfields is a diversified property development business. We're national, multi-sector, but land, and by land I mean master plan communities. It's a space we've been in since inception. It's a space that we like, and we've ridden the various cycles. And I've got to say, I think we're at a very exciting moment in the cycle for land. And I think generally property for the next 3 to 4 years is going to enjoy some really positive conditions and settings, and a great time to get into the market.
Great. And can you tell me a little bit about what's actually happening in Melbourne at the moment, especially in the land space?
Yeah, land, like most other sectors, has been impacted by high interest rates and high inflation. So we're at a very interesting juncture in the cycle where costs ran significantly, but revenues in actual fact went backwards. And that's really a function of consumer confidence and high interest rates. And you are now at a point where lots are being sold at close to replacement cost. So the margins that we were enjoying in the past and in a normalised market aren't currently in existence. But that's actually a great moment or opportunity for investors, because what it means is the market will naturally calibrate, and those traditional margins will come in. So what that all means is over the next 12 to 18 months, we should see some pretty significant jumps in values, just as the current titled stock starts to actually diminish. Off the plan sales, I think, will reset the market. And so those who get in the next 6 to 12 months will do well. And then I think we're into a new phase of price growth.
All right. And where would you see Melbourne in terms of, we've seen some tremendous growth in South Australia, Perth, and across Queensland. And logically, what would you think would be the next move for Melbourne, Victoria as a whole?
It certainly, well, off the back of what I just said, the Victorian market, land market, will grow. And I think we'll see some fairly aggressive growth over the next 3 to 4 years. It will start in the metro markets. The greatest pressure on demand will come through the metro markets first, and then I see a pickup in the regions. And I think what will then happen is in 12 to 18 months, there'll be a nice normalised gap between metro pricing and regional pricing. And I think both markets will then start to deliver good outcomes for both buyers, but also for developers. As a developer, we've done it tough over the last 2 years with inflation and a diminution of demand. It's been tough. But I think a year and a half from now, we'll see both markets, metro and regional, in a really nice recalibrated space, or place, I should say, in terms of margin on sales.
Great. And what would be your advice to somebody that was looking to invest in purchasing in land currently at the moment?
Great times, because many developers are holding titled stock, and most developers bought their land well, and we had very good years in land. And there is a reluctance to what I describe as fire sell the lots, but certainly there's pressure to get rid of titled stock, and that creates opportunity, because, as I said, just the natural recalibration with a reduction in rates. So once we see that first reduction in rates, 1 or 2 movements, say 50 points, I see off the plan really jumping. And when I say jumping, both in terms of demand and price. So between now and that point, and the $1 million question is, when is that point? I think that point happens in the next 9 months, possibly earlier. Certainly, I think there'll be one rate drop within that 9 months, but by the end of the 9-month period, I would be surprised if we hadn't had at least 50-point reduction in interest rates. So that, to me, is the bookend. So between now and then, that first rate drop is good buying from my perspective, because then I think the natural forces will kick in between supply and demand to start to push prices back up.
Oh, that's great information. Yeah. And as you can clearly see from your track record history, is that you've been incredibly successful at choosing great locations to invest in. Can you tell our listeners a little bit about what kind of deciding factors would make you decide to purchase in a specific area?
Well, it all starts with the economics first, right? So, when you run your feasibilities, you need to make sure that the project has the right risk profile, right growth parameters embedded in it, and that there's enough depth in the market to support and sustain a long-term investment. So I'd like to think we're always buying in areas where the fundamentals are ticked in our favour. That doesn't mean that through the cycle there aren't peaks and troughs, as we experienced, but good real estate is good real estate, and eventually, if you manage it correctly, it will deliver the outcomes that you sort of set out to achieve from the start. So there's a real strong emphasis on the economic analysis, and you look at the empirical data to make sure the fundamentals are right. But beyond that, then you need to look at amenity, schools, hospitals, retail amenity. You want to make sure that you're conveniently located to most of those offerings and services. In particular, schools. Most of our estates either have a school within them or a school on their doorstep. We've always found that from a rental perspective or a buyer perspective, a school's a big draw card, whether it be a private or public school. That buyers are attracted to those estates.
Great, that's very powerful information for anybody that's looking to invest in property. Marco, can you give us a little bit of information for investors that are looking to choose the right builder to move forward in the marketplace? What should you be looking for?
Well, firstly, it's been an incredibly difficult period for builders the last 2.5 years. I mean, inflation has provided numerous challenges for them. Most of the house builders operate in a fixed price environment, and inflation came through and created huge headwinds, and we've seen several casualties within the sector, unfortunately, and some big businesses that had been around for a long time, and you only need to look at Metricon and see the challenges that they had to deal with and the hits they sustained. They've now been reset by the entrance of Sumitomo, and that really weaves into the salient point being you want to be investing in a package that's supported by a builder that's got the balance sheet, the strength, the history in terms of delivery. And because when you're buying a house and land package, your biggest risk, in my view, is the ability for the builder to deliver not only the ultimate home, but on time and within the fixed price contract. And ultimately, what will serve you well in that environment is experience and the financial strength of the builder. Those two attributes are what you really want to see or be aware of in terms of who you choose.
Great. Thank you very much indeed. Appreciate your time today.
Great.